Welcome to the stock workout where we flex on the market to make gains. In this video, I'm going to be talking about Zomedica, ticker symbol ZOM. But before we get into it, if you haven't already, hit that subscribe button and like the video and show the channel some support. For those of you who saw my last video, you would have seen that I mentioned there was a double bottom formation here, and we were hoping to break through and set new highs or test previous highs. Since then, we did see the stock pick up, hit a high of around 274, and then we did see it drop quite low. I mentioned that the 21-day EMA had crossed over the simple moving averages, the 100, 250-day moving average in this purple square here. So if I just get rid of that now. But before we do that, if we take a look at the broader market and the 10-year bond yield, if we take a look at the NASDAQ composite, we can see that we ended the week at 13,215 points. At the beginning of the week, we opened around 13,330 points. So we were down about 95 points. We saw the NASDAQ pick up twice in the week. This was Wednesday over here, Wednesday 17th of March, and we were waiting for the Fed to give their presentation to let us know what is expected from the US economy and what the growth is going to be. They gave us all the numbers then and we saw it pick up. However, we did see it sell off once again. This sell-off would have been attributed to the 10-year bond yields. It came down quite low, down to about here, 13,035 points, and then we did pick up by 99 points again, which is a good indication. We were up 0.76% on the NASDAQ when we ended on Friday. That was just for the day. Overall on the week we were down slightly. If I just draw a quick info line, we could see that when we opened on Monday up until closing on Friday, we were down about 115 points. So we were down 115 points for the week. So that was that. But when we were on the lows on Friday, we were down around 290 points. So we did recover slightly, which is a good indication. This sell-off has been attributed to the 10-year bond yields, and I'll get onto that in a second. If we take a look at the last 6 months of the NASDAQ, this is the general trend and the general overall picture that you can see. So previously there have been dips. Now these would have been when there's a sell-off in the market like there is here. So if you take a look from the peak there to the low point there, it was down around 1,100 points. Came down about 9.4%. Now any sell-off of 10% is considered a correction. Anything over 20% is considered a bear market. So when we take a look at this sell-off that's happened more recently, you can see that from this peak here to this low here, we were down about 12.5%. So at that point, we were in a correction territory. That was down here. And then when we move up to here, if I just swing that across, when we closed on Friday, since the high, since the previous high, we're down about 6.5%. So we're not currently in correction territory anymore, but a lot of stocks have been hit hard. Now this has been linked with the 10-year bond yield. So if I flip over to the 10-year bond yield, you can see this is it. So in the last week, if I pull up the 5-day chart, so when we opened, we were around here 1.63%. When we closed on Friday, we were up to 1.71%. On Friday it did come down slightly by 0.18%, but for the week we are overall quite up. It did shoot up quite quickly, and that is reflective in this sell-off that's been going on in this last week. If I switch back to the 5-day chart, as the bond yields came down, we saw the NASDAQ pick back up, and as the bond yields picked up and increased, we saw the NASDAQ sell off and literally crater. A lot of stocks did crater. Penny stocks are always hit harder than your big caps. So as I've drawn this trend line here, overall the NASDAQ was down by about 0.8% for the week. So that is the fourth negative week the NASDAQ has had overall out of the past 5 weeks. So you know, it's a bit of a mixed bag, but overall I do believe we are on the up, because if you switch now to the 3 monthly chart, you can see that we're quite up from the previous lows, and hopefully we are going to carry on. Oh, let's just close that. We are going to carry on picking up. Now, for those of you who don't know, the Fed said that it upgraded its 2021 GDP growth forecast to 6.5%, and that's the largest increase that we've seen estimated since 1984. It also said it expects unemployment to drop, which is a good thing, and that is bullish for stocks. Now, from the Fed's presentation, they have indicated that and said that with their policies, you know, they've created a perfect opportunity for companies to and the economy to continue growing, and that is the bullish stance for it. Now, the bearish stance for stocks specifically is basically to do with the 10-year bond yields. However, I do think this is slightly overstretched and a little bit unfair that tech stocks have been hit so hard. We've seen a rotation of money. We've seen hedge funds moving the money out of tech stocks into sort of banking stocks, which is why you did see the S&P hit new records and hit new highs on consecutive days. Now, one of the bearish scenarios for stocks is that if the 10-year bond yield does carry on climbing, and if it hits 2.5%, if it goes up and carries on climbing and sort of hits that 2.5% mark, bonds may start becoming more attractive instead of stocks from a returns perspective. Now, those are not my own words. Those were from a manager survey from the Bank of America. This is what they said, that at 2.5%, bonds may start becoming more attractive instead of stocks, because you've got to realize as well, a lot of the bonds are purchased from other countries, other banks, other institutions in outside of the US, and from foreigners. A lot of the Japanese people do buy government bonds, US government bonds, because the US government bonds are better than their own Japanese government bonds. So the higher the rate, the more attractive it is to people. And that's when you'll see people with deep pockets moving money out of stocks into the government bonds. Also, on the flip side, if there's not enough demand for the government bonds, you will see that the yield will increase to attract new buyers. However, when we did see the last auction for the government bonds, they went through without a hitch. So I think that this is just an overreaction to bond yields rising, and this is the reason why. If we go back, if we go back sort of on the 5-yearly chart, as you can see here, the yields were sort of around 3%. And at 3% back in November 18, you know, markets were still doing good. Stocks were still doing good. Recently, we have seen the yields increase, and they've been increasing quite rapidly as well. However, I don't think it constitutes to there being a need to have a huge sell-off on the stocks. I don't think that the NASDAQ needed to be hit as hard as it has been. However, that's the case. This is now the yearly chart that I've got the NASDAQ composite index up, and you do sort of see it come down. I haven't measured this yet, so I don't know if this is a full-on correction, but it may be. It fluctuates. This one, so the NASDAQ did come down to its 100-day moving average. It's bounced back up to its 50. It's close to its 50-day moving average now. So this provided a good buying opportunity for anyone that wants to hold stocks long term. Now, just to Now, just to finish off talking about the NASDAQ composite and the 10-year bond yields, you can do a side-by-side comparison. I've got the 5-day chart up. This is the 5-day chart of the NASDAQ, and this is the 5-day chart of the 10-year bond yield. As you can see, later on in the second half of the week, as you do see, the 10-year bond yield does start to increase. When you flip back over to the NASDAQ composite, you see the NASDAQ composite start to drop. So there's inversely related, and NASDAQ has been hit quite hard due to these bond yields. However, I do think it's an overreaction. The economy is set to grow 6.5%, which is amazing given the conditions with the whole pandemic. So this is also something to take into consideration with your stocks. If you are in the minus, you just take this into consideration. So this week, if I just pull up this 5-day chart now, this week we are down overall for the week. We did see that 21-day EMA cross back under the 50, 100 and 200-day moving averages, and then over here is sort of on Friday it sort of picked back up. However, this is a 5-minute chart, so it's not really reflective of the overall trend. If we go into the 3-monthly chart here, we can see that here it's dipped back under the 50 and 100-day moving averages, and is close to touching its 200-day moving average. But I wanted to speak about this last week. In this last week, we had the release of Trueforma, so congratulations to Zometica. But what does this mean for the stock price? So on the release, as a lot of you may be aware, there would have been profit takers, people that have invested and kept their money tied up in Zometica for a while, waiting for the run up to the Truforma release. The minute Zometica released the statement saying that Truforma is now out, profit takers would have taken their profit. It happens across the board with many different stocks, and it is a tactic that is used. Buy the hype, sell the news. But alongside that, something else that hasn't helped, as I've mentioned already, is that sell-off in the broader market, again tied to the 10-year bond yields. That hasn't helped the stock price either. We ended Friday at $2.15, and then I believe in the after hours it did drop slightly more. As you can see, and as a lot of you may know, the price did dip down to around 190, picked back up. That presented a perfect buying opportunity on Friday, and then it did pick up later in the day, and we ended on $2.15. Huge sell-off here. This mainly attributed to the Truforma release. There's been a broader market sell-off as well. The volume is up. So it's 112 million compared to the average volume of 91 billion. Market cap of Zometica now stands at $2 billion. Now, when this sell-off did happen, when Truforma was released, you did see the RSI go from overbought straight down to oversold. It's not been a great week in the market. It's been a bit choppy. So I'm going to give you a few price points of where we're at with Zometica, price points to look out for, and that's basically what we're going to talk about. Now, previously I said these were the double bottom formation, and we saw the stock price run up since then. When it came back down, we seem to have formed another smaller double bottom. Now this is on a more microscopic level because I've got the 30-minute chart pulled up, but we do seem to have a little double bottom formation here as well. From the low here, as you can see, it was around 190, and we did run up to $2.15, $2.12 in the after hours. But where does that lie? So if I draw a quick fib retracement from the bottom of the last run up to the top of the run up, now this is on a microscopic level. Remember, I've got the 30-minute chart open just to give you a bit more analysis on the day-to-day movement of Zometica. Currently we're sat at the 50% Fibonacci retracement. We're sat just above that. So the two bounces that we did see in the middle of the week were off the 61% Fibonacci retracement. As I mentioned before, that is the golden retracement. Now we're sat at the 50% Fibonacci retracement. So your first level of support is at $2.09. I'll try and mark that on the chart for you guys. and the next level of support is at $1.93. Now this $1.93 point has acted like a support or resistance on numerous different occasions going back in the last month or so. So there's two levels of support, the two first immediate levels of support for Zometica, and your next point of resistance is going to be at the $2.25 mark. Which is up here. That's also the 38% Fibonacci retracement. So that will act like the first level of resistance as it is the next level up. However, one thing is, I do like this small double bottom that's been formed here, both hitting that $1.93 mark. This one went slightly under, but it picked up straight away. RSI was quite low. I do like this smaller double bottom formation that has formed, and we have seen the price pick up. Now we want to see that price push further. However, do keep in mind the broader market conditions, and do keep in mind that Zometica will start needing to release some information about the sales of Truforma. Now, one thing I am going to do, I'm going to give you your first level of profit taking. So I'm going to draw a Fibonacci extension this time. We've seen where it retraced to, we've seen where the support levels are. Now I'm going to give you a Fibonacci extension so you have an idea of where to take profits. So if I just finish drawing that up, and I'm going to draw it up to the same level, $1.93. $1.93 was the point of support on the Fibonacci retracement. This is now the Fibonacci extension. As I said before, right here, $2.25 is your first line of resistance, and the Fibonacci extension lines up perfectly with that. That would be the 23%, and that would be your first level, first target for profits. After that, the next target to take profits would be $2.45, and the one after $2.61, and then $2.77. So I am going to mark these 2 points on the chart as well, because as you know, the price is now $2.15. That $2.25 from this fib extension is the first target for profit. However, the golden level in Fibonacci is that 61%. So ideally you are looking for a minimum of $2.77 for a good return on your money. Now bear in mind, this might not go straight up. Stocks don't go up in a straight line. They are a bit choppy given the broader market conditions as well. This may not pan out as you will. However, this gives you a guide of where to take profits. It doesn't mean you need to take all of your profits out at one point. You can take out parts of your profit, or take out part of your initial investment with a little bit of profit at each stage. So you could take out a little bit at $2.25 just to secure some. Then you could take out a little bit more at $2.45. And then if you want, this is a bit more of a tighter range, you could wait for the $2.77 to take out a majority of your profits. So there are your price points on a more macroscopic level, given the day-to-day movement in the last couple of weeks. These would be my first levels of profit. I've given you the levels of support. You can see in the green here, this is where the price is now. So any of these blue lines underneath it are the first 2 levels of support. Everything above that is your first levels of profit. I've skipped out this 50% profit taking level because I do think $2.45 to $2.77 is more of a tighter range where you could push for that 61% Fibonacci extension level. Now, if you appreciate that video, hit the like button. As I've already said, subscribe so I can keep bringing you more content. I will carry on doing more chart analysis. For any of you that are in this stock, let me know what price you got in at. Let me know if any of you have made profit from it, and also let me know what price you think Zometica can run up to. If I just flick out to the yearly chart, as you can see, for the whole of 2020, it was in a really low place. 8 cents. Look at the price now. You know, do the math. Let me know what return on your money that is, from 8 cents now to $2.15. They're finally a commercial company as well, so they continue to sell their Trueforma platform. Revenues come in. This company continues to grow. That's it for this video. I'll see you on the next one.